rand weakening again this morning, so up around 7 rand 5 against the dollar. That's after seeing it firming yesterday on the back of a weaker dollar and rising precious metal prices.
Yes, good morning, Stephen. Well, at the risk of sounding like a broken record, really this dollar rand is really moving in lockstep with that euro dollar. In fact, according to our correlation analysis, we find that the rand is tracking that euro dollar movement more closely than it is your precious metal prices and your commodities in general. So I think we've got to remain firmly focused on what's happening to that euro dollar cross, and of course in that regard what's happening on the sovereign debt crisis front. And it seems as though that has very much come back into vogue. People are concerned about it. Greece probably going to be restructuring, etc., etc. So there's a lot of risk aversion out there. We've seen it in the equity market, and we see it in the key kind of risk barometers, which I think the rand is one.
In that case, would you expect the rand to continue weakening? Would you expect the euro to come under additional pressure against the dollar?
Yeah, I think that the dollar is going to continue to recover on the back of these sovereign debt concerns, just out of default, really. Yes, we do expect the rand to weaken, but of course we're going to have to breach that 706 level first. That's been quite sticky to the top side, but if we breach that, I think we'll probably be heading up to kind of the 717 area fairly quickly. So yeah, I think there's enough scope and impetus for the rand to push higher again.
Well, we had the South African Reserve Bank's monetary policy review yesterday, and again the bank talking about the fragility of the economy here in South Africa, but also the risk of rising inflation. And as we see that rand weakening, that's going to increase that risk of inflation, isn't it?
Sure. If the rand does weaken, then we could very well see some of the imported inflation tick up. The caveat to that, of course, is if the rand weakens in conjunction with the fall in commodity prices, which I suspect probably will be the case. So at least our oil import bill won't increase that dramatically, provided that oil prices retreat to the same extent as the rand appreciates. But having said that, of course, a weaker rand has a lot of other imported inflation components to it. So on balance, it probably will be inflationary. But I think yesterday's comments from the Reserve Bank, and just looking through the review, I regarded it as fairly dovish, actually. I don't think the Reserve Bank is going to be in any hurry to hike interest rates. As you mentioned, their growth forecast is well below that kind of 6% growth rate for a number of years still, or for that matter for their forecast period. So growth is not particularly high. We need growth rates of 6% to dent unemployment and really create jobs in this country. So growth is not shooting the lights out. And on the inflation front, we've seen inflation expectations, which many might argue is actually more important than the actual official inflation print, because that's what people are thinking about inflation, and that inevitably translates into wage demands and second-round inflationary pressures. So that's coming off according to the Bureau of Economic Research. And just generally, I think inflation is probably going to trend higher by default, due to statistical reasons, if nothing else. But if you look at it sort of holistically, I think we can afford to live with a higher inflation rate, given that growth is not that strong.
We also had the SARB's lead indicator out yesterday, falling slightly, 0.9% in March. Any cause for concern there?
Well, exactly. That just talks to my point as well. I think if we look at the coincidental indicator, that was okay. It kind of flatlined. But if we look at the leading indicator, it turned down. So, really, South Africa's trajectory is not looking that good, and that's something that we've been arguing for a long time, something that I think places the rand and the country in a vulnerable light from an investment destination perspective, because other emerging markets are just booming at the moment. They are growing exponentially, and that's why their central banks are needing to hike rates. It's not the case in South Africa, and that's why I think the Reserve Bank can afford to keep interest rates on hold, and that's why we think that there'll be no interest rate hike from the SARB this year.
Michael, globally, anything we should be watching out for? I see that the US and UK both coming out with data today.
Yeah, I think really the crux of the issue here is what's happened on the sovereign debt side. If we have any more bad news out of there, the euro is probably going to come under more selling pressure, and that will translate almost inevitably into rand weakness. So, I think that's what we've got to be looking out for. The data releases in general have been pretty disappointing, but the market's not really paying attention to that at the moment. It's paying attention to whether or not Europe can come up with the cash to pay its debts.